For him, robbing you of only 2% a year is a good thing. So he totally, in my view, inadvertently exposed the system. But the problem is none of those reporters know what I know and what you know by now, hopefully. And that's what I try to do on this channel. I try to inform the public how bad this fiat currency central banking system is. Thursday, December 11th, 2025, Medeco 64, home of alternative economics and contrarian views. Yes, Jay Powell announced not QE again, $40 billion. He's going to conjure up out of thin air to buy treasury bills this time. He says it's for managing the reserves. He says it's for the reason that the economy is growing, they need to do QE. It makes no sense. Can you imagine when the economy goes to reverse, how much QE they're going to have to do? But yeah, I think more importantly, I'm going to talk about how he inadvertently admitted that the fiat currency system under a central banking system really robs you of your efforts, robs you of your savings. Yes, I think it's really important and it's very simple. And I'm going to prove to you that even under a central banking system, but under sound money, things were a lot better. Yes, there's proof of that. I'm not saying I'm pro central banking, but let's take it one step at a time. So before we look into the topic, I just wanted to thank all of you for your interest in the channel. And yes, all the subscribers, all the people that watch it. But there are about 40% of you who watch my content who haven't subscribed. So maybe think about subscribing and make sure you hit the like button if you enjoy a particular video, and also hit the notification bell to be notified of all my new videos. I post one every day. And make sure you share it far and wide. And one thing, talking about the Federal Reserve, I want to talk about this mug. And this is supposed to be Charles Lindbergh Sr. He was a congressman from Minnesota. He was the father of Charles Lindbergh Jr., the aviator. And he was very anti the Federal Reserve Act. So this is the End the Fed mug in the merchandise store. Yes, Rudy is on it. And I wanted to remind you, you've got a few days until the 15th for a special 10% off that started just before Thanksgiving. It goes all the way to the 15th. Yeah, and I think these mugs are great because here we've got what Charles Lindbergh said about the Federal Reserve, and I couldn't think of a better little present for family or friends for Christmas so that they can learn a little bit about the Fed. And what did Charles Lindbergh Sr. say when the Federal Reserve Act was signed by President Woodrow Wilson? Well, I'll read it for you, and I quote, this Federal Reserve Act establishes the most gigantic trust on earth. When the president, Woodrow Wilson, signs this bill, the invisible government of the monetary power will be legalized. The worst legislative crime of the ages is perpetrated by this banking and currency bill, Charles Lindbergh Sr. So there you go. And there are other mugs as well. There's a End the Fed mug with Thomas Jefferson and what he said about banking. So check out the store, merchandise store. There's a link below in the description. So yeah, I was out most of the afternoon with my wife, and we got back just in time, about an hour before the Fed decision. and a little bit before, of course, the press conference. Fed decision went as expected. They cut rates by 25 basis points. Nine members of the FOMC voted for that. I think 2 voted to keep rates unchanged, and 1, President Trump's nominee to the board, Stephen Mirren, voted for 50 basis points cut. So it was as expected. There is a little bit of division, but not much. And I listened to the press conference. Probably not all of it, but most of it. And one thing that caught my attention, well, there are 2 things. One thing that is not as important as what we're going to look at was that Jay Powell said that the whole committee agrees that inflation is too high. So my question is, why cut rates if inflation is too high, right? It just doesn't make sense to me. Why put more petrol or gasoline into the fire, right? But one of the things that, and I mean the reporters that asked him questions during the press conference, they never really give him tough questions about the system. They look at things very short term and what's happening now. There's no philosophical question about how the Federal Reserve works and how fiat currency affects things. Nobody has a clue. But in answer to one of the questions, and I'm not going to bring the clip. If you want, you can find it online on YouTube, the press conference, and go through it if you don't believe me. But anyway, yeah, in answer to one of the questions, he said, yes, back in 2021 to 2023, we had high inflation, and the whole world was affected by it, as if to say it was not really just the Fed, it was everyone. So like they didn't do anything wrong. But the thing wrong that they did was print trillions of dollars in 2020 and to buy government bonds so the government could give free money to people and corporations, and that's what really caused the massive rise in the consumer price index, or what they call inflation, and I don't like to call it inflation, but let's go with it. And he said, unfortunately, what people are suffering right now, the affordability and costs, he called it costs, he didn't call it inflation, right? People are suffering because the price level rose in 22, 23, and we're trying to get back to 2%. We're trying to steal another 2% from you and keep the price level going up 2%. That's what he said. But my question to him would have been, if I was at the press conference, is why can't you go back to the previous price level before the pandemic? And that would mean, of course, the CPI index going down. That would mean the CPI that you get year on year and month on month, you would need a few years of negative CPI. But for them, for some reason, for these central bankers, this is like the plague, having negative CPI. And the reason being is because of the fiat currency system, which is a system based on debt. And you need to keep increasing the debt, because when you issue debt, there's never enough debt to pay off that debt, because you don't issue the interest that pays, the coupon. So it's an ever-ending, let's say, snowball that keeps growing. And we are at a level where, yes, if you try to go negative on CPI, if you really try to tighten the reins, the whole thing implodes. And you might say, well, yeah, that's right, Mario. You can't implode the economy, right? But I'm going to show you here now some charts. And, well, first of all, I'll show you the CPI index. We talk a lot about the CPI coming out at 2.8 or 0.2 month on month, but we never really look at the index. And I've got the index here from the Federal Reserve, from Fred, and you can see it only goes back to 1947, but up until the early 70s, it was growing slightly. It wasn't really steep. But then something happened, right? In 1971, well, August 15th, the US currency, I don't even like to call it the dollar, was detached from gold, from real money. And the CPI has been accelerating ever since. And you can see that the acceleration we had after the pandemic in 2020. And as I said to you, they can't let it go negative because it will bring down the whole house of cards. It went negative here, if you look at it, back in August 2008 till like December 2008. But what did they do when that happened? Well, they announced QE for the first time. They cut rates to zero, and it went negative as well in 2020, and that's why they panicked. And the thing is, since 1971, it's this gradual increase in the CPI, and they lie about this number, of course. It's much. The consumer price index has gone up a lot steeper in real terms, and that's why the bottom 50% or even the bottom 90 is struggling in the U.S. and even the top 10. I've heard stories that couples on like $300,000 a year are struggling to get by. I mean, it's ridiculous, right? $300,000 a year, you should be able to get by fairly easily. But it just goes to show that the currency has been debased. That's real inflation. So now let's go to my historical chart. And this, I'm going to use UK CPI going back to 1800. And then I'm going to look at the Bank of England inflation calculator. Yes, that has been tinkered with as well, but bear with me. So, yes, we had the Bank of England from 1800 to, let's say, 1914. But at the time, though, there was no fiat pound. It was the gold standard. There was sound money, despite the central bank. But as you can see, CPI fluctuated massively, up and down, up and down. And why did it do that? Well, because back then, the government and the central bank let things run on their own, the free market. The only thing I guess the Bank of England worried about was maintaining the liquidity of the banking system, but they wouldn't intervene. It was rare that they would come and bail out a bank. Maybe they did one or two, but I think they did 1892 or 1890. They bailed out Barings Bank, but that was about it. So you might think, well, that's really disruptive, all this up and down. Yes, but from 1800 to 1914, and why do I use 1914? Well, as the chart says, that's when they closed their gold window, the British, with the advent of World War I. When World War I started, they aborted the gold standard. They tried to go back in the 20s. It didn't work. They left it again in 1931. So that was a free market gold standard system with very little government intervention and central banking bailouts or QEs, right? And now I'll bring you the Bank of England inflation calculator. And this has been tinkered with as well. I'm going to put a video up here where I talk about this. They did it in 2022. So the numbers after World War II that I'm going to show you as well, they're bad compared to the gold standard era, but they should be even higher. But anyway, so you can go on this inflation calculator and look at all the numbers. It goes back, I think, to 1200. I'm going to put a link to it below in the description. So I've got 10 pounds here. You can change it to a pound, but it says 10 pounds in 1800 cost in 1914. So this is the result here. What cost 10 pounds in 1800 would cost 7 pounds 26 in 1914. So yes, despite, and this makes sense because we had the Industrial Revolution in the 19th century. Britain became the manufacturer of the world. Britain was at the height of the empire. Yes, it wasn't perfect, but people were a lot better off in 1914 than they were in 1800. And despite that, the currency bought more. So the average annual inflation, or CPI, was minus 0.28. So the reason they didn't care about this is because they were under a gold standard. The debt wasn't as huge. There weren't all the derivatives that they have now, right? So now we're going to look at from 1914 until present day. So you see here 10 pounds in 1914, cost in October 2025. Well, there you go. What cost 10 pounds in 1914 would cost 1,007.16 pounds in October 2025. So that's an average annual inflation of 4.21. And then the reason why I said they've tinkered with it is because I've been looking at this inflation calculator for a long time. And in 2022, I noticed that something changed. And this number from 1914 kind of dropped by 1%. So it's probably more like 5 or 6% that we've had since 1914 every year. And the reason they lie is that they want to rob you of your money, because if you're only getting a small return of 2-3% and inflation is 5 and 6, over 120 years or so, you're going to get robbed blind, or the public is going to get robbed blind. It's only the very wealthy and people who know how the system works, and hopefully you do by now, that can protect their savings. So this is why, yes, when Jay Powell said that, yes, we're going to try to bring the CPI back to 2, but he didn't say, oh, we're going to try to get the cost base below before 2020 and bring CPI negative. No, they want to keep the CPI growing. They want to keep robbing you. He didn't say that, of course. For him, robbing you of only 2% a year is a good thing. So he totally, in my view, inadvertently exposed the system. But the problem is, none of those reporters know what I know and what you know by now, hopefully. And that's what I try to do on this channel. I try to inform the public how bad this fiat currency central banking system is. Granted, in the 19th century, we had the Bank of England, but we had sound money. I think it would have been better, much better without the Bank of England, because I think the purpose of central banks really is to enrich the people in the banking sector through wars and other crises, right? Anyway, nothing's changed fundamentally, and that's why gold and silver remain really strong. Silver this morning got up to almost 63. We're at 62.91. And as I speak here, it's 8:05 a.m. London time. We've seen the Treasury market yields come off a bit in the long end, and I suspect this QE is going to help it, even though it's for bills. But the proceeds that the Treasury will get in the short end, I think they're going to buy back the longer end. That's what they're looking to do. And yes, it's more money printing, and no one in the markets that thinks a little bit buys into it. They're all saying not QE again, right? It's QE5. But anyway, silver right now is at 62.05. It's up a little bit. It's going to be choppy, but yeah, I have a chart to show you in a minute, a silver chart. And gold as well rallied quite strongly after the FOMC, after the press conference, and this overnight session as well. We got up to 42.48. It's come off a bit. It's choppy. It's at 42.15, but I'm holding on to it, of course, and my silver. The stock market is off this morning, especially the NASDAQ 100 on the back of Oracle results. So NASDAQ 100 is down over 1%. And yeah, the dollar came off yesterday as well. This morning, it's kind of unchanged. Yeah, the silver chart I wanted to show you is this one here. Because I've seen, like, for example, Rafi Farber, a good friend who's been on the channel a lot. He likes to look at the gold to Bitcoin ratio, or the gold to Bitcoin ratio. Well, I thought I'd look at the silver to Bitcoin ratio, and I did a monthly chart going back to the beginning of Bitcoin, I assume, August 2011. It might not be, but look at this chart. I mean, yes, Bitcoin had been outperforming silver for ages, but now silver looks like it's taking off. It's broken this falling wedge, and there's a lot of room on the upside. Right now, one silver can get you 0.00069 Bitcoins. Back in 2011, one silver could get you more than 18 Bitcoins. Is it going to get back to that? I have a sneaky suspicion that it is. It's going to take a while, but there you go. The silver to Bitcoin ratio. Anyway, with that, I'm going to wish you all a very good day. Take care. Bye.